On today's Enrique's First Time Buyer channel, I'm going to ask you a question. Is getting down payment assistance worth it? Hey, welcome back. Enrique here with First West Financial. This is my very own First Time Buyer channel where I get to talk to first time buyers or people who are interested in buying a home. There's a lot of questions people have when they are getting ready to purchase a home. There's questions about the process. There's questions about what to do, what not to do, credit, housing, what kind of insurance do I get, what kind of rate do I get, what kind of loan, how do I pick the best lender. It can be very overwhelming, but we make it simple and easy. So make sure you hit subscribe. Go check out the rest of our videos. We have so much information here. We really appreciate you being here. But today, I'm going to answer a question that comes up quite a bit. People ask me about down payment assistance. Now, depending on the location that you are here in the United States, there are different down payment assistance options to purchase a home. And the question is it worth it? If there is down payment assistance, how come not everybody's asking for that help? How come not everybody gets that assistance? Imagine if you could purchase a home and you didn't have to put any money down. Wouldn't that be amazing? There's a reason why those programs are not as popular as you think they would be. And there's a reason why a lot of people, when they learn about them, they decide to not purchase a home. So this video is not designed to discourage you from getting down payment assistance. It's actually designed to educate you, for you to learn more about down payment assistance and how it works. So let's break this down a little bit. So first of all, you need to first understand down payment. The down payment is the portion of the money that as a buyer, you have to put down when you purchase a home. So say, for example, you want to buy a home for $300,000 and you want to put 10% down. So that would be $30,000 down payment, and then the rest would be financed by a bank. That is what down payment is. Believe it or not, down payment can be one of the biggest hurdles that people have when purchasing a home. In fact, if it was up to banks, everybody should have to come in with 20% down. That's really what the banks want. They want you to bring a big down payment. Why is that? Well, because the banks believe that if you put a big down payment, 20% or so, the chances of you defaulting on the loan are very small. But why would you default on a loan where you put $30,000, $40,000, $50,000 down? You're not going to walk away from that transaction. So they believe that. So the government in many cases, or private entities, had to step in to help buyers become homeowners. So you have programs like FHA, programs like VA, programs like Fannie Mae conventional loans with 3%, with 5%, that actually help buyers get into houses with less than 20% down payment. So typical example of FHA, 3.5% down. Fannie Mae has programs for first-time buyers with 3% down, 5% down, and so on. Same with Freddie Mac. USDA has programs with 0 down, and VA also 0 down. But if you're not a veteran or you don't live in an area where there's rural housing, then you're going to have to come up with a down payment unless you get down payment assistance. So what has happened is, I know 3% doesn't seem like a lot of money, but for a lot of people it is. If you're buying a home for $400,000, 3% is 12 grand. That's a lot of money for a lot of people who cannot save it. Maybe they can afford the payment, but they have trouble saving the money. So the first thing we always tell people is your best bet is to figure out a way to raise the down payment. Save. Maybe you can look into your 401k, your retirement. Maybe you can have a gift from your parents. I know a lot of family members who want to help their kids become homeowners, so they give them a gift. That's normal. But for a lot of people, they don't have an option. So what has happened is you have entities, agencies that step in. And I would say that down payment assistance is broken down into 3 different categories. The first one is going to be what we call private banks offering you down payment help that does not need to be repaid, or that needs to be borrowed and needs to be repaid, but it's private money. The second one would be grants. These are government grants that do not need to be repaid. And number 3 would be government loans for second and third mortgages. So let's break them down a little bit. Let's start with the grants. So what happens is, in some states, the state knows that they need to promote home ownership. So they take programs where they give you a grant for 2, 3, 4%, and they help you with that money for you to put down payment. What are some of the requirements? Well, they're going to depend and vary depending on the location, but typically they are for first-time buyers. There's going to be some income limits. There's going to be some purchase price limits. There may be geographical limits where the houses have to be in a certain area. That is what the grants are about. The advantage of the grant is that in many cases, it doesn't have to be paid back. So it's basically free money. To find out more what grants are available in your area, my recommendation is that you Google your county and the word housing grants or mortgage grants and see what comes up, see what's available in your state, in your county. The second one is going to be a loan. And the loan is going to be either private or it's going to be a government entity loan. So I'm going to give you an example. Here in California, there is an entity called the California Housing Finance Authority. We call it CalHFA for short, where they actually have second silent loans that they give people based on income, based on some limits, based on credit scores. And then you purchase the home with that down payment, and then you don't have to pay it back until you sell the house or until you refinance it. So it's a great way to get into a house because you use the money, you start building equity, and then when you sell the house, you pay back the down payment portion of it. So that's one perfect example. I would say that pretty much every state in the United States is going to have some kind of a program. So the way that you find those is you go to Google or search engine and type the words down payment assistance government loan and see what comes up. And you're going to see that there are some agencies that are government related. The best way to also is to check out your local mortgage broker and have them find what those opportunities are there for you. Now, something very similar, which is option number 3, is to do the same thing, except instead of going to the government, the bank itself lends you the down payment on a silent second mortgage. So for example, here in California, there are some banks that will say, look, we'll give you a loan for 96.5%, which is FHA, and then we'll give you the down payment on a second loan that again, you don't have to pay. So what are some of the downsides? Why isn't everybody getting these loans? Enrique, what you're saying sounds really good to be true. Well, there's a lot of reasons. First of all, like I already said, a lot of these programs have a lot of restrictions. They're going to limit the amount that you can borrow. They're going to limit you if you're a first-time buyer or not. They're going to require a certain score. They're going to also require that you are in a geographical area or that you have a certain amount of income or that you only purchase to a certain amount of money, right? So a lot of people find those programs very restrictive, especially when it comes to the scores required. A lot of people don't have the scores, right? So if the score requirement is 680 and you only have 620, you're not going to be able to buy a home with the program. So you're going to have to go get your own down payment. The second reason is a lot of people don't want to really bother borrowing the money because they know they're going to have to pay it back and they're worried that it's going to eat up all their equity. So that's the second reason why those programs may not necessarily be the best. And the third reason, and this is going to vary from program to program, but that has to do with the rate. Traditionally, in general, not always, but traditionally in general, down payment assistance programs carry a higher interest rate than a regular loan. So for example, an FHA loan where you put the down payment is going to have a lower interest rate in most cases than an FHA where they give you a down payment loan. So a lot of people say, well, why do I want to pay a higher rate? It's easier for me to just get the money from my parents or get a gift or borrow the money from the 401k where I don't have to pay interest. So the interest rate tend to be higher and a lot of people don't like that. So that's one of the downsides of the program. But the main reason is because people are confused. People don't know about the programs. A lot of people would probably jump in on a program like this if they knew about them. So here's my recommendation. Speak to a mortgage broker. If you are in California, give us a call. We'll definitely point you in the right direction. We'll find out what you qualify for and what kind of program. If you are anywhere else other than California, go to this website, findamortgagebroker.com. That's right, www.findamortgagebroker.com. Type your zip code, your address, and then pick one of those mortgage brokers that are phenomenal, that are going to be there to help you walk through the process of getting qualified for the right program. Don't be discouraged if you do not have down payment. There are options. Is it worth it? That decision is going to be up to you once you learn all the facts. If you feel that, hey, this is going to be beneficial for us, it's great. I know a couple of families, more than a couple, but I've helped a lot of families who 2 or 3 years ago purchased with down payment assistance. And at the time, they were borrowing $6,000 or $7,000 for a down payment. And now their houses are worth $90,000, $95,000 more. So that investment of being able to borrow the money for the down payment assistance was really worth it. So those are the opportunities that we're talking about. I hope you find out more about your own situation. Reach out to us if you have any questions. Comment below. Don't forget to hit subscribe. I hope you have a great day and come back and see us here at Enrique's First Time Buyer channel.